and thanks to, I'm sure for you to be here, definitely you submitted your task, your activity last session, and I think we provided like a video guidance so that you also see more like a proper way, right? So as you are learning, you are not just learning, you are also providing you guidance as to how to do things in a real uh, proper way of doing things, right? I'm not sure why you guys with AI trying to record note taking. I'm not sure you guys, but that's fine. Okay, so it seems everyone is just using AI assistant to take notes and all those things. It's all right. Okay, so once again, welcome, and let's get straight into what we'll be doing today. Today. Welcome to the session. This is once again giving you my handshake. Today, what are the things we'll be covering? We are taking it a step further today. So you might need to buckle your shoe very well today. Today might be a little bit intense. It might encourage you. The other way, it might also discourage you. As I said, this is mentorship. You the whole thing reside with you. So today's session might be encouraging. It might push you beyond your limits. Ibrahim, not sure why you're putting your hand up. You can drop a chat, please. So you guys don't interrupt. So today's session, just to prepare you, it might motivate you, it might discourage you, it might give you mixed feelings. I don't know, it might want to make you give up and maybe think maybe I'm not sure this is the right skill I want to acquire. So it might give you some kind of mixed feeling, and it might make some people feel great. So it's a mixed thing, right? And please remember, we're just trying to plant a seed. So if you know you're going to be planting a seed on a grand soil that you know that I know germinate something, it's better, just take yourself out of that space. So today's session might be a mixed thing. Might encourage you, might do the other way around, might motivate you, might do the other way around, might even make you feel proud of yourself, of the things you know. So today we're going to discuss business approach to modeling and accomplish that with accounting and business. Kind of work hand in hand with something we call business and accounting cycle. I'm sure if you've attended any of my previous session, I'm sure this should not be new to you. I'm sorry, we just have to cover it again because of our new guys. And if we have time permit us, we can go to something we call creating information lists. But let's dive straight into it. Please, if you have a question, just type in the chat box. I'm reading the chat box, right? So approaches to financial modeling, things you need to know about modeling. Now, sorry to disappoint you. I'm sure you might be expecting me to start that explanation of what is modeling, what is financial modeling. No. We won't do it like that. We'll do it in a very dynamic, practical way. And I'm sure you're going to like it, I said. So I give a mixed feelings. Now let's start. Let's take a look at the different approach that we have when it comes to financial modeling. Should I even say in financial modeling, or should I say it generally in the word? Right? Now, simplifying it, there are always two sides to every story. Right? And your first knowledge is you understanding that approach. Even the word we have those set of people. Now, this set of people are kind of mechanical in nature. And it also comes to modeling. In fact, anything you are doing. We also have them in the accounting space. Firstly, these are the people that understand how businesses are being run. Trust me, these guys are sound. When it comes to strategies, when it comes to setting up things, they understand it fully. It's very, very easy for them. They understand how management thinks when it comes to businesses. They are mechanical in nature. They are good with documentation. They are good with planning and everything. And most of these guys tends to fall into the management role, and they are really being paid well because this is one of the most difficult parts. They tend to set pace. They understand how business work. They understand every aspect of operation. And then we now have the second guy, which is the artistical part. Artistical parts are more of the what will I call them practical guys. So when it comes to modeling, one aspect is mechanical, understanding business. Now, it is the translation of the mechanical parts that the artistical guys are doing. They go to the Excel, create the good structure with Excel, create like a good model component, do all the workings. We also have them in accounting. So the mechanical aspect of it are those guys called some payable officer, receivables officer, um, just name them, right? You have invoice officer, purchasing order, supervisor, and all those things. These are the guys that know deal with the operations, help in creating the source documents, and they now feed it into the accounting team, which will do the artistical part of it. So mostly those mechanical guys, they understand that, oh, this is the client that is owing us money. This is the client that's kind of buy more from us. This is more like the seasonality of when this client comes in to buy, and the whole thing. They can understand that management think that, oh, this man is owing us money. We need that cash to run this business. And the other guys just collect the data, use it to create that. Right? So now in the finance space, I think those mechanical guys, at times we call them the economic advisory, because they are the one that do all the research, data gathering, visibility study, putting assumptions together and just feed it into the artistical guys. But there's no way you'll be a sound modeler without having a combination of the two. And that's what will make you separate. Most people tend to focus on the artistical part and they leave out the mechanical part. It's not all about numbers. It's all about story. It's all about business. Every aspect of business is being translated into a financial figures. Just take it. In the corporate finance modeling, that's all we are trying to do. Every aspect of the business, how has it been translated into these figures? And what do we expect going forward? So let's dive a little bit into the mechanical, a little bit, before we go to the artistical. Now, the mechanical can be boring at times, but it is needed. Let's start with business cycle and accounting cycle. And let's firstly understand the role of an accountant and understand the role of a finance person. As we know, accountants are more historically focused. Finance seems to move a little bit into the future. Above all, they are all attending to one thing, which is business risk. Accountant will give us the report. This is how we've managed the business risk to where we are. Finance guys will look into the future and help us think about a way we can manage the business risk into the future, how we can reduce it. Now, as I said, it's all about business. And as much as it's all about business, everything you are saying about business you are discussing, if it is not resulting in cash, it is nothing. If it is not returning, if it's not turning into cash, it is nothing. So which means cash is king. Even as human being that we are, you know what? If it is not turning into cash, it is nothing. I want to acquire more knowledge. I want to be skilled. I want to be this. All you are trying to do is to make yourself an asset that can keep generating cash as a means of exchange, is a measure of return. Now, as much as that cash is important, you first need to be able to do what? To combat, to have what we call operating assets. To convert it into operating assets. Cash does not come freely. As such, you need operating assets, which is the first thing that comes when we are discussing business. You're going to look at a flow of this and I will translate this into modeling. So the first thing for a business is operating assets. Now, operating assets can be anything. Can be current assets, can be non-current assets, can be factory, can be raw materials, can even be that cash itself. As long as that operating asset is driving how you generate revenue, it is an operating asset. Go to your balance sheet. As long as that line item is driving what? How you generate revenue. For a typical manufacturing business, you definitely know they have the plants and equipment. They need those plants to be able to produce raw material and other operating assets, stock, because that's what they will sell, right? Make revenue. Now, when they make that revenue, definitely it comes with its own cost. We deduct those expenses and costs. We have our profit. We translate that profit into cash. So which means there's a difference between profits and cash. I think that's coming from our accounting uh, recognition of cost and expense and income. To profit, convert it into the cash. As I said, everything we're having a net profit margin of 25%. If it is not turning into cash, the story is not there yet. Oh, we make sales of 5 billion. The 5 billion is not turning into cash, it's still not adding up. So cash, means of measuring. And they don't just leave that cash idle, they invest, they continue that cycle. Because once you exhaust that cash, then the end of the business is coming. Now, this is everything about business. Irrespective of the industry, irrespective of the sector. Operating assets is a must. You use it in generating revenue, you manage your costs. You have your profit convert into cash. There are some industry that even they always have excess cash ahead because people are depositing, people are giving them cash ahead for their product. Now, let's now take a look at the role of an accountant. As I said, it's all about business. Understand that mechanical aspects. Translate it, and by the time you are looking at the figures, you can see the story. Accountants will give us the reporting of everything about our operating assets in our balance sheet, which means that's where you can find it. That's why they usually tell us that the first value of a business can be seen in their balance sheet, the book value. Profit, revenue, expense, we see that in profit or loss account. That's the story of what profit or loss account is telling us. You can only see 3 line items in your profit or loss account, also known as income statement. Is either as revenue, expense, and anytime you deduct one revenue from any expense, you get profit. Anytime you deduct any expense from any profit, you get profit. at different level. We get there where we discuss structure of financial statement. And for the cash, we see that in the cash flow. And that's the work of the accountant to help us with this recording, to align this story together in figures, in values, right? And that's why we can do, it's easy for us to evaluate a business performance, to see how they are doing, because we want to see how much of the operating asset are they using to generate revenue, how efficiently are they managing their costs, how are they, how well are they injecting that cash again in expanding the business revenue. And that's where finance comes into play. Firstly, remember, the first thing that needs to come into the business is the cash. Now, the finance guys will come in and take a look at it. If which source of funding do we need to consider that will give us optimized return? Should we go for loan? Should we go for equity? Should we go for personal funding? Different funding mix that will give the owner of the business optimized return, which is the first cash that comes into play. Because when you have that cash, that you can now flow that into your operating assets. On the part of the profit, it's all about market penetration, right? How well are we converting that cash? Are we making use of our operating assets in achieving more, right? Opportunity costs, because it's not as if you just be making revenue and the cost is eating into it. How well can we manage ourselves into that future risk? And investment viability, which is where we have the cash flow. Measure return, doing the valuation, and that's where their own role is. Now, how does this business and accounting cycle, how does it flow into our financial model? How do we apply this? Okay, now, assume you want to start a business. What's the first thing that you need to do? So let's type in the chat box. Assuming you have a business idea in mind, what would be the first thing that you need to do? Let's have that conversation. Perfect. So the first thing we need to do is what? Visibility. Visibility, as I said, business is all about risk. It's all about risk. So firstly, you need to be able to identify those risks. You have market risk, economic risk, business risk, macroeconomic risk, governmental risk. So which means you need to first do the visibility. In fact, your modeling can even be part of the visibility. Right? That visibility, if I'm going into this business, what are the things that I need to do? Now, once you can establish that, the next thing is what? To get the first cash that will come into the business, because cash is king. You are not doing anything without the cash. Even if your business idea is so beautiful. Funding, which is the first cash. Now, in getting those cash, you also need to consider those costs of funding. Get the funding, then you turn that funding, which is the first cash, into what? The first operating asset. So operating asset, maybe you want to set us a software, set up a plant and equipment, anything you want to do. Even working cash could also be that working asset. Your capital expenditure, also known as capex. So you more like you telling us how you are going to make use of the fund. And the same thing also play out when we are dealing with a corporate organization. To see that story. Once you've established that, then you start your business operation. Start generating revenue, manage your cost, you get your profits, and you convert the profit into cash, which you use in evaluating the business. Right? So the same thing again, if you look at it from another shape, markets and economic factor, which means you need to consider that. After that, you go straight into getting your funding. You get the funding, you start the business operating cycle. Assets, working cash, revenue, you have your profits, and you have the cash, and the cycle just continue like that. Taking a look at it from another rearrangement, you have your business model canvas. And that's where this mechanical aspect of it comes into place. You cannot build a model if you do not understand the business. Don't just be an artistical guy that they will just give you the data. You need to understand the business operation. After that, then you can now go ahead with your model build. First, those visibility factor need to be considered in your model. General assumptions, your macro assumption, for example, one, you need to incorporate government, you need to make provision for governmental risk, right? Pay provision for tax, provision for inflation factor, right? Price incremental index factor, and any economic thing that can impact a typical business performance. Then you go ahead with your financing assumption, the first cash coming in. You tell us how you plan to make use of the fund, those working capital, provision for working capital and every operational cost. And then you start generating your revenue and other related costs. And you go ahead with your calculation and your output analysis. Now, I will still come back to this shape, but I want us to first move from our known, right, into unknown, which is one of the best simplified way I've seen that you can use in understanding financial model as a starter. Right? One, you've understood that this is the business concept in a story approach. Right? So let's move from the known to our unknown. Now moving from the known, let's have one activity. Remember, as I said, to be very, very practical. Now, let me share a link with us. I want us to download this file. We'll share the link now. Right, so let me drop that in the chat. Let me drop the link in the chat box for us. So what we want to do now is we want to move from known to unknown. So moving from your prior knowledge and how modeling came into play. So I've dropped the link in the chat box. So please click on it and download the 3D document that you have in the workbook. Then once you have that, you can come back to my screen and type done, so that I'm sure we are on the same page. I've dropped the link in the chat box. Let me drop that again. So once you open that, it should take you to, you should have something like this, right? Should have something like this, then right click, just right click and download. So create like a folder. Right click, download. Let's go for activity warm up. Oh, okay, great. So let's wait for others. So once you have it, so just go ahead and open the 01 activity. It's a PDF document. So please, we are waiting for others. Please just type done in the chat box so that I'm sure we all have the documents and we're on the same page before we go ahead. We have one activity that we need to do. Okay, so we are waiting for others. We are waiting for others. All right, so please let's go ahead and let's open the 01 document. It's a PDF. It's a PDF document. It's a PDF document. A PDF document. So this is what we are going to do. We'll be doing this in the live session. Okay, it's just one of our warm-up activity. Now, if you struggle in completing this activity, please just know that you have a lot of work to do on yourself. Okay, now let's look at this typical business cycle that we have here. Now, this is what we want to do is we want to prepare a normal account report. We want to prepare a normal accountant financial statement. Okay, and let's look at this. You've been provided with the following information regarding Mr. Sample Limited business for the period FY 2024. Now, Mr. Victor started his business with 50 million with his personal contribution. What is that 50 million to the business? So you can look at my own screen and let's have a chat. So please, what's that 50 million to the business? Yes, there's one term that I expect us to say from our business cycle. Using the business cycle term. Business cycle term. Let's use the business cycle term. Started business with his personal contribution of equity. What is that term? What is that fund in our business cycle? Business cycle. Thank you, Mufe. Cash. That's the first cash coming into what? Into the business. First cash. Now, he said he purchased a property, plant, equipment, and other fixed assets worth 13 million. Basically, what they are telling us, so look at the story. He started the business with 50 million first cash. The next thing is what? Tell us how you want to make use of that cash. Oh, he purchased a property, plant, and equipment worth 13 million. That's the first what? What is that 13 million of the property, plant, and equipment? Now business cycle. Now business cycle, business cycle, business cycle. Operating assets. Right? It's telling us how he's going to make use of the fund, and that's the first operating asset. Now, he did the business registration and licensing worth 1.5, marketing 3 million. Those are still what? Those are part of use of funds. We call them pre-start expenses. Right? He's still telling us how he's still making use of that 50 million. He purchased an inventory of 20 million, prepaid rent of 10 million, and insurance of 2.5 million. These are all prepaid expenses. They're still telling us how he's going to make use of the 50 million, right? And we can see operating asset line item there. We can see normal operating expenses being prepaid. Okay, inventory is also part of the operating assets. Now, he sold 200 units of drink products during the year at 75 per unit. Please, what is this? What is this saying? What is this guy saying? This particular, he sold 200 units of drink products during the year at 75 naira per unit. What is that saying? What is that to the business? Revenue. Thank you. Revenue, right? Quantity, price. Simple. It's giving us revenue. Perfect. I love the way you guys are thinking. The cost per unit is 45 naira to kobo. That is what? That is the cost of sales. Now, operational expenses are salaries of 1.8 per month. Rent, that's the amount he paid. Admin expenses, that's the amount he paid. Selling and general expenses, that's the amount he paid. Operating expenses. Now, the business had a receivable days of 30 days. So which means when they sell to clients, it takes 30 days before they get their cash back. Payable days of 40 days. Which means anybody they owe money, you always take them like 40 days before they pay back. Inventory days of 25 days, so which means whenever they have any product, it always takes 25 days before they can sell it out from their shelf. Prepayment days of 30 days, so any expenses they need to pay, sometimes they tend to prepay it like 30 days ahead. And on-hand revenue of 20 days. Right? So just take a look at what this is saying. Study it, look at it closely. Right? Now, they now ask us to prepare income statements, balance sheet, and cash flow. So you want to prepare a normal account statement now. Now, you can see the story of the business cycle from this. So irrespective of the business, either it's starting, either it's been in existence for 10 years, this is what we look out for. Firstly, the story. Right? Now, as I said, activity, the best way to learn is when you get to do it yourself. Okay, so now I want you to go ahead and open the 02 document. 02 document. Now it's going to, so go ahead, open it. The 02 document. So let me show, I will preview it for you before I'll give you the password. Yes, it's passworded. So just leave it, come back to my screen. So open the document and come back to my screen. Yes, I'm going to give you the password. I'm going to give you the password. So now, here, luckily for us, they've extracted those financials that, everything that we need. Okay, so they've extracted those assumptions that we need for us to do what? To prepare our financial statement. So here, owner's contributions, which is the 50 million, and below, this is how they plan to make use of the funds. Right? And you can see that the amount they are bringing in is equal to the same thing they want to do. Right? And here you have your revenue as well. Please, those guys that are disturbing us with recording, please just leave those people. Yes, please. Our previous recording was sent to everyone. So if anyone is in this session, definitely must have attended the first session and completed the task. Right. Okay. So here they've given you your revenue assumptions. They've also extracted that for us. Operating expenses on monthly basis, they've extracted that, and working capital assumptions, they've also extracted that. Then just some general assumption thing: months in a period, days in a month, asset lifespan, tax rate. Okay, so you can see that. So they've helped us in extracting this into a good looking format. Now, here, this is now where you need to work. So your homework is to go ahead, create schedule. You are filling the ash color cells, right? I think there are some some guidance comments that you can use. So look at the line item, the description. As I said, part of the learning is attention to details. Yes, is a must. So your capex, depreciation, PPE, calculate your revenue, your cost, calculate your operating expenses. You have comments there. To attention to details is part of what you need to learn, right? Self-review, operating expenses, operating working capital. I think they also have like formula to help you do that. Calculate your tax. Then once you are done, you go ahead to your financial statements, complete your income statement, complete your balance sheet, and complete your cash flow statement. That's it. Remember, this is a mentorship. Doing it, I'm giving you guidance to complete your cash flow statement. So now I'll give us like, I think 10 minutes should be good, right? So if you don't get to complete it in 10 minutes, then we can now do it together, right? So if you are just joining this session, I'm sorry, as part of our mentorship, we said discipline is a must. You're expected to join on the dot. So if you've missed anything, I'm sorry. I'm not sure I can help again, because if someone is just joining at after 39 minutes, that's not a, I'm not sure that's a very good habit, right? Time is very important. So I'm going to give us the password now. I said 10 minutes. If you struggle to complete this normal financial statement creation, that means just know that you need to really go and work on yourself. Remember, why I'm sounding like this is because this is not a training, this is a mentorship. So, and as part of mentorship, you're also expected to have your own prior knowledge. Okay, so I'm going to share the password with us. If you cannot complete it within 10 minutes, then we just get to do it together, right? As I said, don't worry, you don't have to be hard on yourself. Just stay open and work with the pace. All right, so this is the password on the screen. Map, all lowercase, MAP. MAP. So remember, we are working with the 02 file. We are working with the 02 file. So I'll start the timer now. 10 minutes, 10 minutes, make your attempt. So remember, everything you need to do the calculation, you have it. It has been extracted for you already. So your own task is go to the schedule, complete each of these calculation, complete the schedule, right? Once you are done, link them to the output to create the income statement, to create the balance sheet, to create the cash flow for their historical financial report. All right, so I'll mute my mic now so that you'll be able to concentrate. As I said, attention to details, look through, there are always information, there are always guidance for you. You can see that this is telling you, remember to multiply the monthly input by 12 months and all those things. So just look through A multiplied by B to get you, oh, this is the line multiplied by this. So attention to details. Okay, all right. So the password is map, M-A-P. So let me be quiet so the others can concentrate. Well done, everyone. Well done on your attempts. Sorry, it's part of the learning, as I said. Today's session will be kind of interesting. So let me give us maybe additional 5 minutes. All right. And then after that, we can get to do it together and you can look at where you're making mistake and things like that. Well done, everyone. And it seems it's getting more interesting than I expected. We have only one submission now. One submission now, right? So, because see, trust me, the knowledge in this activity, you definitely need it. Because this will be more like our starting point. So someone is saying, give us 10 more minutes. Okay, I think I should give you guys more minutes, right? Okay. Let me add that. Even if it's the only thing we do today, I don't mind. See, ability to be able to really sort this, we really take things far. Yeah, because this is the starting point. Your ability to build three simple financial statements. That's all you need. Okay, so let me give us additional minutes. And if it still remains the same, then we'll turn it to our assignments against the next session. Sorry, it's just we just have to do it. Well done. The pressure is getting worse, but I think we have 3 submissions already, or I think four. Okay, yeah, we have 4 submissions already. Okay, making sense. All right. So looks like we are on track. As I said, this is expected to challenge you, and right. So said his mentorship is to just take you back to the basis. If you are struggling with this, please, sir, let's do it together. Okay, so I think we should do that. I think we should do that, right? Let's do that. Let's do that. Let's do this together. Let's do this together. Because see, there's no magic to it. If it's difficult for you to understand how to put together a typical 3 financial statements, and then there's no magic, the modeling thing might be very difficult for you. So if you did not study the accounting, right, or you don't know accounting, sorry, we are not doing like accounting thing here. So you might want to go online to be part of your own personal investments, to just take some training on accounting. I'm sure if you go to YouTube, you will see free content there to understand accounting and how we put that together. There's no magic to it. I'm not sure, I don't know how you can be a good financial modeler without accounting basic. And I think in the while filling the form, it was part of the most required skill that you must have. So sorry guys, that seems to be beyond me now, right? Because this is where from here we are launching into the modeling concepts. Okay. All right, so please let's do it together. 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 Right? Let's do it together. So yeah. So if you are done, you will see a code that will show on your screen. You will see a code that will show on your screen. So it is that code that you're expected to type in the chat box. But still, let's get to do it together. Maybe we also cover some basic concepts here. Now, for equity, let me see. Even if this be the only thing we do today, I think at least I should be okay with that, right? So maybe what you want to do is firstly save a copy. So save a copy of this document, maybe the one you are working on. You can save that. So you can save a copy. So save a copy. I'm sure you know how to save without password by now. So I want to see if I have. So I want to show you so some basic terms that we can also look at. Okay, all right. So for this schedule, I know someone was asking a question about how do I go about CAPEX schedule. So let me show you this, just a short presentation, please. And if you have any question, you can ask. So now we have schedules when in financial statements. Now every line item in our balance sheet represents ending balance. Right? Every line item in your balance sheet represents ending balance. And see, typically, this is how mentorship are being done. So it's different from training. So mentorship is I give you something to do, right? Then if I see the knowledge gap, that's when I come in and help you and assist you. Because that's, in fact, even training wise, that's more like the best way of doing things. Okay, so now every line item in our balance sheet represents ending balance. So I'm just doing this sort of for people that don't have typical accounting knowledge, or maybe you've forgotten some of the concepts you've done in accounting. Every line item in our balance sheet represents ending balance. Now, in getting that ending balance, you always need to create a schedule. In a proper well-built model, all the line items in your balance sheet must have a proper schedule, right? I think some people call it schedule. I think, is there any other name some other people call it? Okay, some people call it control account, right? Now we have three types, and what we've done is we've used abbreviation, more like an acronym. So the first one is BASE. So which means we are saying any line item in our balance sheet must use one of these three. So the first one is base. B for beginning, A for addition, S for subtraction, and E for ending balance. Right? Now, let's assume you have a 3-period time frame. My beginning balance for any period will always be my closing balance for previous period. Yes, I'm sharing my screen, so maybe I'm sure it should be maybe from your own end, but I'm sharing my screen, please. Beginning balance for any period will always be your closing balance for previous periods. It's as simple as that. Say today is on the 1st. I'm saying, oh, what are we starting with? Definitely it is what we close with the previous day. So beginning balance, closing balance for previous period. Addition, what are you adding? If it is an asset, PPE, you are adding your what? You are adding your new capital expenditure. So the addition will now be different from each other. Subtraction, what you are deducting, and you have your ending balance. So for a typical property, plant and equipment, beginning balance, closing balance of previous period. Addition will be our new capital expenditure. Subtraction will be our depreciation. At times, we also make provision for sales of assets, and then you have your ending balance. And that is being repeated every period going forward. Right? And the second one is what we call BCE, beginning balance, change and ending balance. Now, anytime you hear change in accounting or finance, basically what that is saying is either an increase or a decrease. That's what change is saying. So it could be a mix of it. So beginning balance, closing balance for previous period, change could be addition, subtraction, and you have your ending balance. And it's the same across for the years. For the OWC, that's operating working capital. And that's made up of our current assets and current liabilities. And that's where we use our, for example, trade receivable days divided by days in a period, multiplied by what? Multiplied by the driver. If it is receivables, that will be revenue. If it is payable days divided by days in a period, multiplied by cost of sales. So there's no magic to it. You just need that accounting knowledge. All right. So now let's go to our case study. So my beginning balance will equal to what? Equal to closing balance for previous period. Simple as that. So remember, as I said, save this so that you can practice it again. And I think I'm going to give us like an activity to even do as part of our assignment from this. So maybe we just need to change our plan. Right? Inflow, because it's an equity, equal to, I'll go to my input. What is my inflow? Owner's contribution. Simple as that. Enter, and I will sum it together. I'm good with my what? I've completed that calculation. Simple as that. Please, any question, any question, any question. You can go ahead and do your own now. Any question, any question, any question. You can complete your own equity now. Let's go to the next one, which is the use of that funding. Now, whenever a company, for example, because we are dealing with startup, so whenever they want to raise a funding, right? Because we also get to where we develop like information request lists to setting up your assumptions. If someone is saying I'm investing 50 million into 50 million in a business, definitely the next question will be, as from the business cycle, the next question is, what will you use this 50 million? What are you using it for in the business? Please, can I do the beginning balance again? You see people that don't give attention. Oga Busayo, I'm not sure I even understand Busayo. We're dealing with one case study, was asking password for another case study. I'm not even sure I get that. Can I do beginning balance again? I see you guys, you can see something now. I did it. I first show you that presentation. Then I went ahead and I worked on the schedule. It's still saying I should do the beginning balance again. Am I lost? Or is it that was I too fast? That's by the way. Okay, so now we are bringing in 50 million. Definitely you need to tell us what you will be using this for, right? So which means you need to itemize everything and it must always equal to the same thing. Sorry, recording will not be shared. Busayo, thank you. So the list of the use of fund must always equal to the owner's contribution, the capital investment that is being injected. Even everything can even go to like working cash. That's the concept. It must always be equal. Okay. Now, by the time you list your use of funds, you now need to do like categorization. For example, business registration and awareness will be expensed. That's why I said, see, it's a mentorship, it's not a training. You cannot do without basic accounting knowledge. I stated it in when you were filling the form. So please don't blame me. Don't feel somehow. Yeah. So as I said, you can go online, go to YouTube, see free courses on basic accounting and the thing for your own personal learning, your own sacrifice, your own investments. So registration and licensing, definitely we are going to expense that. Awareness, we are going to expense that. PPE, we are going to capitalize it because we need to calculate depreciation on it. Okay? Inventory, that will automatically come in as part of our cost of sales. Because you know, it's inside your cost of sales that you will see opening balance, purchases of raw material. So this inventory is more like that purchases. Okay? Prepaid rent, definitely by the time you're accounting for your, so why it is being prepaid, you know, in our beginning, you know, in our, when you are accounting for the transaction expense, you expense it on periodically, right? Even though you prepaid it in cash, you just need to account for it based on the maybe you spread it over the period, okay? And the same thing for insurance, okay? So now, luckily they've even stated that. So pre-start cost expenses, those are the ones that will be expensing. Others capitalized and the rest will automatically flow into our operating expenses. So registration, just all you are doing is just link and sum that up. So that's what we go into our P&L as our what? Pre-operating expenses. For our capex and depreciation, our PPE, which is our new capex, just link that here, our PPE, enter. My asset lifespan, 5 years, enter. And to calculate my depreciation for that current period, just what? My PPE divided by my what? By my asset lifespan. Simple as that. Any question? Any question, please? Please ask relevant question. That's why I'm taking my time to also explain and slow things down. Okay? Now let's now go to our PPE. PPE. Said beginning balance for any period will always be the what? Closing balance of previous period. Even though previous period is empty, just make sure you do it like that. So equal to previous period ending balance, even though there's nothing in there, don't worry. Just do it like that. Enter our capex, which is our new asset, equal to, you can just pick that from your input. Enter my depreciation, which I've calculated up here. Enter, and you can now do equal to beginning balance plus my capex minus my depreciation. I know some people might have used the negative concepts, right? Which, and just do like this. The truth is you are correct, but our first standard is saying we should always put all our values in our model in absolute format. Though by the time we get to the typical corporate world, corporates, most of them tends to be using this other approach where they put everything in negative. But at least for this case study, let's use the absolute approach where everything is in absolute value, and our formula will just do the plus minus. Okay, so I think if you are using the negative approach where you are building your model, you just state that in your model build. But for this, let's just everything in positive value. Okay, so now for our revenue, let's calculate our revenue. Any question here? Any question here? Please ask, because this will be part of, I think from here, our next assignments will be from here. Now, our quantity, let me calculate my revenue. Quantity, just link that straight here. Quantity, then my price. So to calculate my revenue will be equal to quantity multiplied by my price. Simple as that. Okay, to do my cost of sales, quantity, just link that straight to my quantity as well. Then my costs, link this to my cost. And my cost of sales will be my quantity multiplied by my cost per unit. Simple as that. Any question, please? All right. So now salaries. So they said, remember to multiply by month, by 12 months, right? So here I have everything stated in months. So which means this value multiplied by, I've been given my 12 months here, which I'm going to keep constant. Enter, and I can drag it down and sum everything up. So I have my what? Operational expenses. So now, as I stated, that if you go to our use of funds, right? Even though this was stated as inventory, right? The reason we did not include it as part of our pre-operational expenses is because it is assumed to be inside this our total cost of sales. Because that's where you see your purchases. So that cash was made as what? Was used as more like a cash provision for maybe first few months inventory that we need to buy, right? And if you come to our operating expenses, you can see this rent, right? And the rent here. So which means this rent was also more like that cash provision that we now expensed here. And the same thing for insurance, which I think will be part of the admin expenses already. Now, let's do the total summation of our operating expenses, SG&A. So equal to my startup pre-operating expenses that I've calculated up here. And my what? And my operating expenses here. And I can sum both of them together to give us our actual operating expenses for the period. Okay. So now for me to now calculate my working capital, you only need 3 line items to calculate your working capital. Revenue, cost of sales, and your operating expenses, also known as selling, general, and admin expenses. So I'll just link this guy to what I've calculated up here. Revenue, link this to my cost of sales, and link it to my total SG and A. Simple as that. Now to calculate my inventory, right? The formula is there. The normal way we do it, you're still doing this is accounting. You are not even doing modeling at all, please. So inventory, days divided by days in the period, which is 365 days, multiplied by my what? Cost of sales. So equal to, come to my input, my inventory days, right? Divided by my what? Days in a year, which has been given here, 365, which I'm going to keep constant. Then I'll multiply it by what? Multiply it by my cost of sales. Simple as that. Now I can just copy the formula down and move this. Okay, let me do it again because some people. So equal to my receivable days divided by my days in a period, right? I can keep that constant. Multiply by my what? Multiply. Let me put it this way, and then multiply by my, because it's receivables. That is what? That is revenue. Enter. Prepayment. Do the same thing, but this time prepayment will be for my what? SG&A. And I can sum that together for my assets. Payables equal to my payable days divided by days in a period, 365 days, and multiply by what? By my cost of sales, because that's where you see your supplier's cost. Then on hand revenue, which are more like customer that have paid before we even did the service for them, also known as deferred revenue. I think they are calling it contract asset contract liability now. So you can sum this together, and to get my operating working capital equal to my what? My total assets minus my what? My total liabilities. Enter. Right now, to calculate my tax, there's no way I can calculate my tax if I've not completed my income statements up to profit before tax. So I'll come here to my financial statement, and all I'm doing now is I'm just doing linking. So equal to my revenue, come here, come to where I have my revenue that I've calculated here, link that. My cost of sales, come here, link my cost of sales, enter. Gross profit equal to my revenue minus my cost of sales, like that. Selling general and admin expenses equal to, go to where I have my total SG&A, enter. EBITDA, my gross profit minus my what? My selling general and admin expenses. My depreciation, link that to where I have my depreciation in my cost, my asset schedule. Enter. My profit before tax equal to my EBITDA minus my what? Minus my depreciation. And to calculate my tax, come back to my calculation here. Now do my profit before tax, which I will be bringing from here, and I can calculate my tax. So my tax rate is 30%, which I have in my input, and my profit before tax, then multiply by my tax rate will give me my what? My tax expense. So I can link that tax expense, link it here. And this will profit before tax minus my what? Minus my tax. So see, as I said, this is a mentorship. So which means if you observe that, man, I'm struggling with this, you just need to take your time, sit down, develop. You know what? See, if you actually, even if you studied accounting and youth and you are struggling, see, don't feel bad. You know, as I said, at the end of this, it's going to give you like a mixed feelings. My career changed, right? When I also realized that I went to school for 4 years and I was given a simple case study and I could not solve it. So don't think anyone that has the knowledge today just know, right? And as I said, am I going to say our academic system or something? So I went to, let me give you that good story. I went for one interview. In fact, then I was even well skilled in Excel. And by the time I was done, the man only told me something, that my Excel skills quite good, the finance aspects quite fine, but he's only shocked that I went to, and my school was a good school I went to, so I won't mention the name of the school, that I used 4 years. I studied accounting, and he somehow understand why, but he just had to tell me that how come I struggle in understanding a practical case study of payable payables, right? More like a prepaid expenses, and prepaid expenses and what's this other name? So payables, right? Okay, prepayments, right? And payables. He only gave me just like the practical, like I struggle in understanding it. That is only concern. I didn't get the job, by the way, but you know what I had to do? I had to go back. So after he gave me that comment, and I asked him that, okay, please, can you just give me a brief explanation? And so the case study, he now related it. By the time he explained the whole thing, like, this is what you have in the book. This is what you call prepaid. This is what you call prepayment. I was like, I wish the grant could just swallow me. But you know what? I didn't allow that to push me back. And that was the whole change. That was the whole change in my career. Because I had to go back, look at what is textbook saying. And I need to find a way to relate it to the typical practical word. Okay? So, okay, I'm getting the question. Okay, so someone is like, please go over with income statement from EBITDA. Okay, so that's something we. So from EBITDA, right? With EBITDA, which will be our gross profit minus cost of sales. You already have the description here. So EBITDA, then we link this to our depreciation in our PPE. So, so, so depreciation, you have that in your PP. So as part of what you are learning is one, know your model, know your work. And that's why I'm not a kind of template modeler. I build my model from scratch because see, as a modeler is just like an more like an architect person that wants to build house. So which means you have the pictures, you have the image in your head that, oh, this is how this looks like, this is how this looks like. The same thing applies when you are building model. Because you are presenting a client asks you a question, you definitely know where to go to. Right? You need something so it's like a picture. I've worked on more than 200 projects, but trust me, if you bring any of my model, I only need to just look through for like a minute. And I know where everything is in the model. Okay, so you are here, you are thinking I need the depreciation. The first thing that should come to your mind will be, where will I get depreciation? Oh, definitely if I need depreciation, my PP schedule. So you should know where you have it in your model. So here, depreciation, link that. Profit before tax become EBITDA less depreciation. Set. Now we need our tax. I will need to come down to my calculation here, where I have my profit, provision for tax. Okay, so I said we link this to our profit before tax. Get your tax rate from your input, then you calculate your tax expense, which we now link back here as our tax expense, and I can calculate my net profits, profit before tax less our tax. So someone is also asking, can you do expense for profit? Okay, can someone explain how they got the NCA? What is NCA? We've not even got into NCA. Okay. All right, so now let's go to the balance sheet. So balance sheet, net fixed assets, as I said. So as you are doing that calculations, you are doing it with your mind. Being a modeler, you kind of wear some different cap of skill, right? And that's why it's just one of the skill you can have. Okay. So here, net fixed assets. So one thing is know your financial statement structure. Second thing is know how you've done your workings, know where what is coming from. So net fixed assets, okay, maybe it's the name that is confusing. Sorry about that, guys. So the net fixed asset is the same thing as this, your property, plant, and equipment, PPE. And as I said, every line item in your balance sheet represents ending balance. So equal to, I'll go straight to my PPE ending balance and link that. So sorry, maybe it's the name that is confusing you guys, right? So, but I'm sure no accountants will be here and will say does not know what net fixed asset is. Okay, so now inventory, I'll just link this straight to my working capital. So the calculation here represents ending balance. So cash, that will be the last thing. But you go ahead and we do summation of everything, including that blank cell. So cash is the last thing that you will link. Okay. Then do your total assets, which will be your total non-current assets plus total current assets. Don't worry, the guy will still be frowning at you until you get that cash. It should be the last thing that you need to do. Okay. So here, my trade payables, also link that straight to my working capital. It's my on-hand revenue, my tax payable. Now, for the tax payable, because most times when you, for example, you are closing your book at 31st December, right? You don't get to pay your tax on that day. You pay it, let's even say you are paying it the following day. And by the time you pay it in the following day, it's entering the following period cash flow. So as at that period, it forms part of your payable. So which be equal to, just link that to this tax that has been calculated in that current period. It is payable because you are actually not paying it. So it is the following day that you need to pay it. Okay, and then you sum this together. Owner's fund equal to the equity that was calculated there, the ending balance, you link that, my retained earnings. So because there's no previous balance, just the same thing as my net profit for that period. So assuming they have previous net profit, then I'm going to add that to my retained earnings. My total equity, sum this together. My total equity and liability will be my total liability plus total equity. Right? Is a must. See, if you need to spend time on getting this, please do. See, model is such a great skill to have. And by the time you get to you see all these ones are just small, little model kind of build. By the time you get to the real world of model build, the last thing you want to be your problem is not being able to understand three financial statements or be able to link. This will even be your last worry of balancing a typical financial statement. Okay. So profit, let's create our cash flow statement. So one, understand the structure, understand how they flow and how they connect, part of basic accounting. So profit before tax, and I'm sorry for guys that didn't study accounting. It's not our fault. You can't blame us. We used 4 years, but this is on a joke level, please. We spent 4 years. Some of us spent 5 years, including some unexpected drama from government schooling, delay, and all those things, to study this concept, right? You guys went to study your own concept. We did not cross you guys. We did not come to you guys' feet. But you guys want to cross to our own feet. So you cannot blame us. Something we use for years. I still wonder how most of them still tends to grab. Yeah, but that's just the truth, right? See, most of them, by the time they get these concepts, and I wonder, so why did I not spend 4 years? So I was like, why did I not spend 4 years? If I could have just decided to go and study something else and just move to accounting field then. No, I'm not trying shade, but that's the truth. See, if you go to the industry and you see some top great guys, ask them. Some of them will tell you they didn't study accounting in school. And I'll just be like, so how come I did not even go and study something else? And most time they tend to even outperform us. That's just the truth. So yeah, I don't know how you guys tend to catch up, right? valuation, you see them. Financial analysts, they are one of the best. If they are one of the best research analysts you can even find. You'll be like, so maybe I should have studied something else and now do what you guys have done. Because I used 4 years to study this thing, and you guys are just then within a year they are up and they are good. I was like, okay, it's getting interesting, right? So my depreciation equal to, I'll link that here and see that exactly. Thank you for that, John. So John said I studied engineering, but because I'm studying for ICANN, I was able to do this task. So don't feel if you don't study accounting, if it's what you really want to go into, it's just that sacrifice. Get it, trust me. And so you see those engineering guys, I don't know if it's because of the further maths concept they did, it just kind of make it easier for them to roll and stuff. Okay, all right. So inventory changes in inventory will be what? My previous period minus my current period. Enter. So increase in inventory, that's reduction in cash. The same thing, trade receivables. So previous period minus current period. Increase in receivables means we have less cash. Prepayments, increase in prepayments means what? Cash is out. If giving cash out before it's due. Trade payables, because they are liabilities, you're supposed to pay someone and you decide not to pay them. That means you still have that cash with you. So increasing, so which means current period minus previous period, which is the inverse of the assets part, right? Then you have additional cash because you're supposed to have settled it, but you're yet to settle it. Increase in on-hand revenue is minus previous period, right? They've paid you ahead, so which means you have that additional cash with you. The tax, because we are not paying it in that current period, so you know what will be? So equal to just minus, as I said, previous period tax will be paid in current period. So just select the previous period. So because remember we said the tax you calculate for, let's say, December 31st, you are not going to pay that. You are not paying it that period. You are paying it the second day, which definitely will flow into the next period. So that's why we recognize it as payable, and here just becomes dash because you are not paying anything. Okay, and here we can sum everything up to make our cash flow from operating activity. Capex equal to minus, where will I get my capex? Definitely from my PPE schedule, right? Then it should be in negative because it's a cash going out. Sum this together, my equity inflow, go to where I have my equity, enter. And here I will sum everything up. To calculate my cash schedule, beginning balance, closing balance of previous period, even though it is blank, link it like that. Cash for the period will then be cash flow from operating activity plus cash flow from investing activity plus cash flow from financing activity. Enter. I sum this up to give me my cash balance. And this cash balance is what I will now need to link up here. And that will give me my what? Tell me my balance sheet is balanced. And now I'm done. Okay? Okay? Okay. Now, any question? Any question? Any question? Any clarification? Now, what we've done is we've created a typical financial statement, right? Based on the data being given to us. And I'm sure now that you can see that it is getting interesting and the pressure is getting worse. So now, this is what we'll do. This is what we'll do, right? Which will also be your assignment against the next session. So changes in working capital, right? So in the cash flow, I'm saying if your inventory is increasing, so inventory is basically previous period minus current period, right? Increase in any asset line item means what? cash is going out, the negative cash. So for example, inventory is saying previous period minus current period gives you negative, is basically saying what? You have a negative, that cash outflow. Increase in inventory means you've bought more raw material. That's basically what that is saying. Increase in receivables, previous period minus current period, is basically saying what? People are owing you more, which means you've made sales, but you are yet to collect cash. So which means this cash is outstanding. Prepayment, increase in prepayment basically means what? You've taken cash out already before the expenses are due. Okay. While in liabilities, they are always the other way round. Okay, so please retain earnings. Yeah, so for the retained earnings, I said that's the same thing as your net profit, right? But if you have like a previous balance, so maybe we should do the retained earnings as equal to previous balance plus our net profits in that current period. We'll still give you that same thing. Okay, so now after the class, after the session, I will try and share the recording. The reason why I don't want to share the recording is, because I was saying some funny things. I know people can be so so funny. So maybe I'll just create like a short recording or something. Let's see, and I will share that with you guys. But now for your next activity, which I need you to submit, right? Next week, but I will need to confirm to you guys in case. But if you don't get any email, that means likely we might not have session next week. Need to attend to some things. So now this is what I want you to do as part of your activity. I will share the recording, then I will share like the not passworded work file that you can work on. For the example, this one you cannot do anything there, but I will unlock the work file so that you'll be able to edit it. Now, this is what I now want you to do. Now, remember, this is the value for actual period, right? What I now want you to do is to create a fictitious assumption. So let me say this over 5 years, right? So this over 5. So I need you to create a 5 years timeline, right? So don't worry, just make your fictitious assumptions. For example, now here, you can copy this input. So maybe I'll say that maybe in year 3, maybe the business will bring in another maybe 10,000, 10 million naira into the business, right? So which means we want to move from the actual into the forecast, and that's where the modeling thing is coming from. So historically, this guy has given us the report that this is how we've performed, right? Now we're not saying from here now, let's look at how the business will even perform in the next 5 years. That's the whole thing we are doing in financial modeling. Okay, so now what I want you to do is, by the time you were doing the actual, use the set of assumptions. So that's the same thing I want you to do now. So create fictitious assumption into the future. Come to your price, come to your quantity. So maybe below, maybe they will be selling maybe by 500, will increase by 500 every year. So don't worry, just make everything input. So please, instruction, so that some do not do different thing, right? I'm saying, into the future, maybe this is the unit they will sell. Make fictitious assumption. Don't worry about what or what. You can keep the price and quantity, price and cost, keep it constant. Operating expenses, maybe you can decide that, I want to increase it by 10%, but make sure they are all hard coded, please. Make sure they are all hard coded. Don't worry about it. So you can keep it constant. You can make it, just increase it. The operating expenses, you can make it, maybe you can even make them the same thing across other assumptions. Those can be the same across, right? The use of funds. So maybe you also want to do the same thing for the use of funds. So listen to the instruction, please. So I will only send you the work file that you can edit and the recording. So here, so maybe I've just said everything. Maybe they want to use it for typical business operation. I can just put that in here, the 10,000, like this, right? All you need to do is come to your schedule and also do the same thing. Oh, can I edit here? Okay, so I'll share you a version that you can edit. So you do the same thing here. So you create the workings for the next 5 years. You create the same workings for the next 5 years. Said you are allowed to make your fictitious assumption the way you want. Go ahead and do the calculation the same way you've done it for this actual. You are doing the same thing for the future, for the forecast, using this new set of assumptions. And then with that, you can now go ahead and create your what? You can go ahead and create your next 5 years forecast and see how that will look, what that will look like. So try to make it reasonable. I hope we are clear with that instruction, and submit it, right? Please send it to me, and that will form part of our what? Our next, where we start from next section. So you can see now that I did not have to explain what is financial model to you, but we are coming from the known factor. So that's why that known, the basic of that accounting, how we create typical financial statements, you just need to know it. This is just the basic, right? Is that clear? Is that clear? Is that clear? Please, no one should send me email asking me what's the assignment again. So said from what we have, I will send a file to you, which the one you can edit and update, right? Go ahead, create a 5 years timeline from there, from the actual that we have now. So which means firstly, make sure you try to complete your actual. Create fictitious assumption. You are allowed to make any assumption, but make sure they are all hard coded. Don't put any formula in it in input. Hard coded. Okay. Come to your schedule. Create the next schedule for the next 5 years. If you've set up your assumption very well, it should be easy for you. It should be easy for you, right? So I think if you've done it, if we've done everything correctly, if I copy everything like this, it's supposed to, I don't know if it will update or not, but let me leave that to you. Right? Do proper self-review. Then use that to create your financial statements, both for income, balance sheets, and cash flow. And what you are doing now is what? You are building a model. Because one, you have a set of assumptions. Okay? You have a calculation schedule layout, and you have your financial statements structure output. Right? So one, remember, complete your financial statement as an accountant. Now, once they are done with their own responsibility, that's where your own will now come in as a financial modeler to create that forecast. Make fictitious assumptions, and in the next section, that's when we are going to, if you understand this and you are fine with this, by the time we are building from scratch, we'll now take you through the concept, what we use in making our own assumptions from scratch. Right? How we get data, how we make a reasonable calculation. For this one, I'm asking you to go ahead and do input. But in a typical model, we don't just put input. There must always be basis, right? Because you know that this one is more like an accountant's report, and you know the truth is we question everything. So now, the reason why you see a financial statement telling us that your revenue is 151 and no one is questioning it is because of what? Because we believe it has been audited, and that's why we have auditors. So everyone questions almost everything. Accountants, then you have internal auditor and external auditor. Now the reason why they trust these figures is because it has been reviewed, and because you have source documents. I say, oh, you know what? This we actually sold this. These are the invoices. These are more like the cash that was received and the whole thing. So now, which means in modeling too, they tend to question everything. So which means there must be a basis to our assumption that drives our forecast. We'll be doing that in the next session. But for this one, just create those fictitious assumptions for the next 5 years. Build your schedule. Use that to get your output and share your file with me. Right? Quite clear? Any question? Any question? I said this session was very interesting. You know, I told you guys initially that it's either it makes you or it might or kind of make you feel somehow, right? But it is what it is. It's part of the mentorship. It's not a training. It's not a training. So if I've sounded somehow, you don't like it, sorry about that. It's just what it is. I said I can be hard on you, can be harsh. Just part of the process. You just have to trust that. So after this, I will share the recording with us and also give you access to, and with that will come with the file for you to download. Then you use this. Should not take you time, right? After the training, spend 20 or 30 minutes. Okay, just try to pull it together and you are good to that. All right, so thank you everyone, and please let's make sure we enjoy the rest of the day. If you have 1 or 2 questions, I'll just stay back maybe for 2 or 3 minutes before I close the meeting session. Thank you everyone, and please remember to last session I did not end the meeting, and can you believe that someone was in the meeting call after 6 hours? What of the second workbook? No, leave the second workbook now. Don't let's go there. Let's let's deal with this. So maybe next session we can pick things up from there. Right. Right. Okay, so thank you everyone, and people that were able to complete it during the session. Well done to you guys. Right. So maybe don't worry. I think I'll just save it now. Let me stop recording. I'll just save the over. I think let me just do it now so that I can drop the I will drop the file. So just check that folder. And thanks to, I'm sure for you to be here, definitely you submitted your task, your activity last session, and I think we provided like a video guidance so that you also see more like a proper way, right? So as you are learning, you are not just learning, you are also providing you guidance as to how to do things in a real proper way of doing things, right? I'm not sure why you guys with AI trying to record note taking. I'm not sure you guys, but that's fine. Okay, so it seems everyone